All right, let's kick it off. It is Thursday, March the 1st, 2021. Dimitri, just me and you today, huh? Everybody else playing hooky, I guess. So good morning. Hope everybody's having a great day, regardless of what time you're watching the video today. So I told you yesterday that I put on the Uncle Tony trade, right? The Tony from Mexico trade. And, it's pretty cool, right? I mean, you can't lose to the upside. If the market goes down, it's acting as a hedge. We see there that that could get up to $2,010 in profit, right? But you might be down a little bit for the day. But as far as a hedge, that's pretty cool. Let's look at the Uncle Tony trade here on Tastyworks. So all you're doing, and this is the great thing with options, right? With options, it gives us so many options because anytime that I buy something, right? So let's say that I'm buying an option. I hate buying options, right? But if I buy an option, then I want to sell an option to pay for it. Now, there are a million different things that you and I can do with options when it comes to creating trades. So what the trade was, the Uncle Tony trade is he's just buying a put spread, which is bearish, right? You buy a put spread, that's bearish. So he's buying 4 and he's selling 4, and he's doing that for a buck credit, right? So $1 credit, which at 4 contracts, that's costing $400. So the game is to then go and sell something to finance what you bought. And we can do all kinds of things with this. We can do risk reversals, advanced risk reversals, all kinds of trades where you're buying something and then financing it with the sale of something else. So when you put this Uncle Tony trade together, it looks like this. So here's price, right? And depending on the credit that you get, you cannot lose to the upside. 0 losses to the upside. And if price comes down, then you have this nice little buffer of profit. And your break even way down here, around 305. So very cool trade, right? So that gives you a little bit of downside protection, no upside risk at all. Market keeps going up, I don't get hurt. I get to keep whatever the credit was that I did this trade for. So let's look at it from the Greek standpoint. So what did this do for my Greeks? Okay, so here is the trade in Thinkorswim. That's why I like Tastyworks, the visualization better. See, it's not even finishing the graph for me here. But you can see my profit hump. You can see that this is current price here. And if that keeps going up, I'm going to make $10 profit. Woohoo! Right? Which is not a lot of profit, but if we get in here, I'm making $2,000. And I did the trade for credit. These are the types of trades I love that you can do for credit. Gives you good downside protection. Now you can lose if you go too far back here, right? You can lose. Now, the only problem that I have with this trade is it takes up quite a bit of buying power, right? So it looks like about $3,700 in buying power. So it cost me to put it on, but I got a credit. So I'm looking, if the market goes up to infinity, I make $10. If we come back into here near expiration, then I can make $2,010. Now, where did I put this trade? where did I put it as far as time-wise? So we went out to 78 days. So I think he was about 79, 78 something days when he put his on. So I said, okay, that'll give me a lot of protection, downside protection in the account. I always love hedging, and just show you what we did. Oh, and this is why it's so much easier on Tastyworks as well. Let's just do it on Tastyworks so you can see. I found out the strikes on Tastyworks, and then put a trade in on Thinkorswim. So let's just recreate it. Let's delete all these. So we go to the table. We go out to around 79 days. Then you're going to find the spread, $5 wide. So we'll buy this put and go down to the 374. Okay. And you want the one that's at $1, right? Well, that's $1.56. So we just move that on down. $1.47. See, this is the great thing about Tastyworks, man. You can just move that thing down, keep moving it down till you get $1. So let's see, $1.07, $1.04 right there. All right. And then you're going to do that 4 times. Here's the quantity. So do that 4 times, 3, 4. Right? At $1.03. So now we need to sell one to finance the cost of that for $1. So you go way, way down. Way. Let's find one we can sell for $1. No, $4, sorry. Because we got to pay for the overall credit, right? So we're not going to do 4 of these, we're going to do 1 of those. So find one that's going for $4. I mean, you could go down and do 4 of the $1 ones, but you're going to have more transaction costs, right? So I would come here and sell that one. Now, that one, you see, has -4 there. So I can just delete that and put in 1 there. I'll say I can. There. So there it is. Make sure that's picking everything up. Total trade cost $304 credit. That doesn't seem right. What's going on? What did I do wrong? It's got 4. No, it changed that one too, didn't it? Hold on. Let me pop this back up. Let me go back to quantity of 4. It'll change them all. All right, then what I got to do is just click on this one. All by its lonesome. There we go. Now we'll do the quantity of that one down to 1. There we go. So you're getting an 18-cent, well, depending on what you got here, right? You get just a little bit of a credit. Now, the only problem with the trade is because it has 3 legs. All right, so this one shows now that it's a debit, right? So we can solve that, can't we? We could move this one up here so that we can get a credit. Let's see. Things are moving all around. And that was the only problem. Another problem that I had with the trade, right, is that it took a little bit of time for this thing to work. I think I had it working for 2 hours yesterday, right? So you kind of get the gist of it. So just move those around to where you're doing the overall trade for credit so you can't lose to the upside. And then it gives you a little bit of downside protection. So let's look at it again in the analysis tab. Curve. Yeah. So you got a little bit of profit to the upside. You got this little whale right here and the tail of the whale. So, I mean, you can still lose, guys. You still can lose. And it's taking up a good bit of your buying power. Okay. But this is a type trade that you certainly can do. All right. So let's see what that's doing to my Greeks. Let's see what that particular trade's doing to my Greeks. So I'm positive deltas. I'm positive theta. I'd like to be neutral to negative here. I got a little bit of negative Vega and up to 27 on the day. How does that actual SPY trade look? Oh my gosh, it's down on the very bottom. It says we're down 175%. Well, now it says 80%. Now we're down 100%. It's moving all over the place, right? So that gave me just a teeny tiny positive delta. It gave me some great positive theta of $7 a day. And it gave me a little bit of negative Vega, right? And there it's taking up $3,700 in buying power. So if you're back at the Analyze tab, then you can walk this thing too, right? You can walk it to see what it does over time and how the trade acts when time changes and all kind of stuff. You can do, doesn't look like it's doing anything. It's either stuck, but you expect that, as theta comes in, that you're going to achieve hopefully some of this profit, right? So kind of a cool trade, probably a slow trade and probably something you got to hold for a little while. All right, but let's do our little analysis. And I want to talk to you today a little bit about the Black Swan Hedge. Okay, I just want to, we've not talked about that yet. And I think it's an interesting trade. And we'll talk about it a little bit today. The thing with the Black Swan Hedge is, the way I was taught it, is it's hard to find the actual strikes that we need to make it work. So we'd have to do a little bit of this great downside protection, especially when you're carrying positive deltas, right? All right, so let's check the condition of the forest, because you, Dimitri, you, Matt, you, Drew, you, James, are all portfolio managers. It's what you do. You've got an account. You are portfolio management, and we are learning the art of managing a portfolio. And I would say I'm the worst on the planet of managing a portfolio. But the reason I'm the worst is because I have done every conceivable thing wrong and lost Teslas. Every time I think of the amount of money, I go, that'd probably buy a Tesla, the amount I lost. But am I still bitter? Well, heck yeah, I am. Heck yeah, I am. Let's see if I can share my little screen here. Not really bitter. You just never forget those things, right? Let's see if I can pull in my little phone to show our net lit for the day. Yeah, you guys are in charge of your financial destiny. All right, device is mirroring to PC. Okay, well, where is my device? Dang it, where is it? Hold on a minute. When I got 4 screens all over the place. Again, you don't have to have 4 screens. The most successful trader that I know trades on 1 screen, and he brings in the moolah every day. But he ain't here. And he always said, Bobby, you can do this. And I'm like, I don't think I can. So here we go. Let's bring in this with all my kids' games so we can see what our net lick is for the day. So based on, and we got our new Sims card in. Oh my gosh, we have terrible service. And there it is. So where are we at? We're at 48,091.26, 48,091.26, 48,091 point, was it 26? Close enough, right? So we're down a little bit from where we were yesterday. So we're, we're hanging in. All right, so then we go and let's check our Greeks. All right, 26.83. Man, the market's just moving all over the place. We're up, we're down. Last night it was down big, and it came back. I'm like, man, this is crazy. But I'm loving the two-sided action. I hope y'all are too. It's good stuff. So what's our theta? Remember, we brought in another $7 of theta from that SPY trade, 192.73. 192.73. Vega 219, 216.51. 216.51. All right. Now I'm at 0.4. I'm good, baby. I'm good. Here's where I'm in trouble. Been in trouble for a while now, but that's okay. I'm accepting the risk. 29,758. 29,758. No big deal. So we're at 61%. I do need to trim a little bit. No adjustment on my delta cell. So the forest is okay, other than me taking a little bit too much risk. So then we're going to go and we're going to manage the tree. So we know the state of the forest, right? The forest got a little too many trees in it. No big deal, no big deal. Now let's see what we got going on here. TLT, about what it was yesterday. Baba continues to be a little pain in the rear, but we got 43 days on it. No big deal. How many times am I going to say no big deal today? No big deal. Our XLE, this trade is up 34%, right? The other part of the XLE is down a little bit. So let's just see how those look. We've got 22 days left. So it's getting close to row your boat in XLE. So we go to analyze. Let's throw the old tree up on the table. If you would, sir, remove your trousers. XLE. All right, what do we look like? Y'all, I just love my little yellow circle. That was well worth the $12 I spent on that. All right, so here's XLE, baby. We are getting close to where we're going to cross that break-even side up there, right? But I don't think, we're not there yet. And tomorrow will probably be the day that we'll manage this trade, or we'll roll it out in time. I don't see us anything definite that we got to do today. I like looking at it in the trade tab just to see how close things look here. Come on, baby. XLE. Now, the Black Swan Hedge is not my trade. I've told you, every trade that I do, I've learned from someone else. I just take the good of what I find. I take the crap of what I find. I even try the crappy ones and develop stuff that I'm comfortable with. And the Black Swan Hedge, all credit goes to a gentleman named Ron Bertino. You can find his videos on YouTube. He is a smart fellow. So we're at a 30 delta, 26 delta there. We are actually converted on this one, aren't we? So the call is in the money there. So we got some management we could do tomorrow, but we're not doing it today. Friday's our manage day, huh? UVXY, yeah, down $7, not bad. That's one of our hedge trades, right? IWM trade is looking sweet, baby. Now remember, we're selling IWM Apple every week because we've got long options. We've got a long IWM put out 6 months. We've got a long Apple call out 6 months. And we're just selling premium each and every day. Each and every week to pay for that long option that we've got, right? So we are synthetically long, and then we've sold a call against the long Apple, and we're long a put IWM, and we're selling puts against it, keeping the drive alive. So on the SPY trade, I don't have a spreadsheet built up to track that SPY trade. So what I did is I said, look, I'll get credit for selling the naked put, right? I'll put it on the equities page. So that naked put is up $22. And then I'll put the debit spread. All my debit trades, remember, go on other trades. So I just put this here. So it, cost me $440 to put that spread on. So I'll just manage my IWM, my long Apple, my long SPY over here. when I eventually close it. But it's not something that I'm looking at a current price any day to see what the trade is doing. I'm happy and content to be over here selling stuff against my longs. So here's my shorts, other trades, here's my longs. So I keep up with it all, right? So there's probably a better way to do that. And as I said, the spreadsheet is constantly changing. And so you guys were able to get it last night. It's on, go to sweetbobby.com. I put the link in the thing. You can go pull up the spreadsheet that helps us to manage our trades. It's there, ready to go. All right, do I have any credit spreads? No, everything's closed out. Do I have any commodities? No, because I've been spending too much time in BABA and Goldman Sachs when I should be there. So then we'll go to our macros page and see if anything is screaming for us to close it. Looks like we got a couple here, doesn't it? We got a $48 profit here. This is our largest. And we got close signals. It's a 30% profit, it's a 40% profit, and it's the Tasty Trade Optimum close. And you and I love closing one every day. And that's a good thing. You get all these trades, right? You got, normally something is profitable every day. So I'm close something every day. And that one's saying the 40.80 in the 52. So we can go close it. The 40.80 in the 52-day expiration. So let's go close it. 40.80. A lot of times it's just easier from the monitor tab. 40.80 in the macros should be the first one. Yep, that's our most profitable one. Oh, it was our most profitable one. Now this one's more profitable. Let's close it instead. Well, they're jumping between each other. Okay. Oh man, which one's more profitable? Let's watch them flip back and forth. This is cool. Let's close the 40.70 then. Just saying it's the most profitable now. Create closing order. Buy it. 14. Let's see if we get it. We should. That should fill. There she goes. There she blows on my phone, but not yet on my computer. So we'll go in here and take out the 40.70. There she is. And we're closed at 14. Booking profit, y'all. Booking the profit. And 14 there, close. And we got out at today, 3/4/21. And it's nice that all of these are profitable, except for the one stinking trade. So we got a little $39 brought into our farm. Somebody came over and wanted a tree. We said, well, we got one if you want it. Take me $39.56 and you can walk out of here. I feel like I'm at Collinsville, Alabama. Matt, you ever heard of Collinsville, Alabama? That's where the trade day is. I once traded a watch when I was a little kid. There was my
been the trade days there.
There you go. Listen, when I was a kid, I went to Collinsville to the trade day. I traded a watch for an Alberta peach tree. And that peach tree lived until about maybe, I don't know, 8 or 9 years ago. And then it finally died. Never had many good peaches on it, but it was kind of cool, right? So we close that. Let's see how we're looking on our weekly premiums then. It says my day's complete because I've already sold $1,800 worth of premium. I don't have to do anything. I only got $40 remaining for the entire week. Our profits this week, y'all, we have done well, right? After having a miserable week last week, we've come back this week. We're up $911. We're capturing 49% of the premium that we sold. So we've sold 1,800. We've collected this. You know, now we're not breaking it up here, are we? Like we were earlier, but that's fine. We're early in the game. We're 2 months in. We've already had our State of the Union address. Know what we need to focus on, right? We just always reevaluate, and we've had $1,329 of net profits for the year. So not bad. So let's do our work in our macros now. Let's go see our entire account. And our entire count now has 52 deltas. So it went from 40 something to 50 deltas, right? And I hate selling calls, don't I? Oh, I hate it. But let's look. The market is down a little bit today. So that's a day that normally most rational people would say, I'm going to sell a put on a down day. You don't want to sell a call on a down day, right? But I do need a little bit of negative delta. I really do. And you can tell the market's going down just a little bit now because my deltas are increasing. So let's go to the trade tab. Let's put something in. Let's go out to 57 days. Will we sell a call? Yeah, I guess. It hurts. I'm just trying to manage the portfolio overall. So we'll go down to 15 right here. 15. We'll sell this one for 21. Can we get it for 21.50? Let's try. Never hurts to try. So we'll go ahead and copy that. Yeah, we got field. Right click. Yeah, we got filled at 21.50. Nice, baby, nice. So let's go here, copy that. And back to the spreadsheet. Go to the macros tab. And let's put a slapper in there. And yes, we did a Johnny 1 lot because that's all we got to do to keep our little farm going. This is what Beth is going to do on a daily basis, right? So we got filled at 21.50, and that was the 40.60 call. Control V for Virginia. And we did a short call. Actual delta we did was 15. And we did that at 57 days out. Got in it on the 4th. So my week is actually finished as far as premium selling if I follow my rules. And we got 21.50 for that. Just bringing money into the forest. We planted a sapling, didn't we? What does that say? We're up $34. If that's the case, the market's crashing. Did I do that right? 21.50. Current day price is at, wait a minute. I did the 40.60. That's the 40.50. No wonder. Let me change that. 40.50, 40.60. I knew something was wrong. I was fixing to close that, get my $33. Dang it. Now let's see if that'll work. Come on, give me my price. There it is. God, that's even better. Well, I know what it is. I bet it's in the wrong expiration. You know how my Thinkorswim's been switching up on me? I bet that. Yeah, look at that. 43. Where did I sell it? Make sure I did sell the 57. Yeah, I did. So if anything's wrong, it's normally operator error. It's what we call, if you got a piece of pencil with you, write this down. It's called an ID, then the number T, then the number 10. ID, letters ID, number 10, and then the letter T, error. Anybody writing that on paper? So we did the 40.60.
Idiot error.
That's right. It's an idiot error. So if anyone from IT ever, that's how you think I know about that. You know, I got these IT people, you know, that come in and work on your stuff, and they go, Jim, it's just an ID10T error. And I thought, ID10T error? I never heard of that. And I looked it up, and I'm like, oh, I see what you're doing. I see what you're doing there. So let's make sure we paste the right one in there. Let's see if this looks better. There we go. There we go. Every trade we begin is a loser when you're selling premium, right? So we got another close signal here, but let's don't close it. We want something to close tomorrow too. What if they're all red? You know, don't want that. So that should have helped out our Greeks a little bit, unless the market's moved too much. And yeah, there we go. So it went from 50 something to 40 something. So now our overall trade here is a little positive, right? And I could do other things, but I'm fine. I'm good where I'm at. My spreadsheet says I don't need a delta adjustment, and everything that I do is daily is I should try to get that down a little bit. So now let's talk a little bit now about the Black Swan Hedge a little bit and the way that I implement the Black Swan Hedge. Lots of different variants that Ron teaches that you can get into it. But generally what I did, and today is probably not going to be a day that I'm going to get into it, but I've never done, I always do it on the E-minis, right? I always do this trade on the E-minis. In this account, I may actually see, I've never done it before, so I don't even know if it would work, if I can find anything that would work, but I've never done it on the micros before. So that poses an interesting question is, can it be done on the micros? Well, the thing about the Black Swan Hedge is, theoretically, Ron would find an option that was selling for $3. And that's been the problem as I've been looking for opportunities. There is no option here that trades for $3, right? So that would mean, I guess, if we're going to do it, you're going to have to augment what Ron taught because of the way the pricing is in the markets now. Here's 360, but you sell one at $3 and you buy the one that is 50 points below, and therein is another problem. 50-point strikes don't begin until here, so you'd have to sell this one and buy these. Let's go down one more expiration, see if there's anything that looks like you could possibly do it. See what the pricing is here. See, they're not $3 either. I mean, there's the closest to $3, but you don't have anything under it. So it makes for a difficult, somewhat difficult trade. But I'm going to show you what the risk graph looks like on the trade. Okay, so I guess you would go, I think he was going to about a 7 delta or so where he was doing that. But see, that's nowhere near $3. But I just want to show you what the risk graph looks like. So let's go down to the lowest one that we could possibly go to and show you this hedge. So let's say we're going to do the 2350 because we need $50 wide strikes. All right. And then you're going to sell 3 of these. Okay. Then theoretically, you're going to buy 5 of the one that is, look at that price, 5 of the ones that are 50 points below that strike, right? So let's bump that one up to 5 just to show you what the trade is. And I'll show you how I do it. I don't do it as one trade. I normally don't get into the trade all together at one time. So this would take you, if you wanted to put on this hedge, this would cost you a debit of $71. And your buying power effect in my account is 0. That's one good thing of putting it on. Now it's going to cost me, if I were to do this trade, $71. And let's see, the break-even prices are, it shows you there. Max profit, 22,000, right? Max loss, $800. So what I want to do is just show how it is. Now, you can do it in the micros. I believe you can. You can do it in the E-minis if you needed a hedge. But let's evaluate and analyze the trade. So we're going to analyze trade. And we'll go to the macros. We'll go to hide positions. We don't want to see our positions. We just want to see our one little trade. And look, now, don't tell Uncle Tony this, but this is why this is a wonderful trade in comparison to his hedge. Check it out. On his hedge, you lose nothing to the upside. You have a chance to make good profit here if its price comes in here and comes in, you know, at expiration. Now you could certainly lose prior to expiration because this little line starts going down here, right? But then you've got all this risk down here, albeit that this is down to, you know, 310. Well, that'd be a big, big drop. So not saying that this is not a bad hedge, but this takes up $3,000 of buying power, 3,700. In my account for this one, this takes up nothing. And I want you to see how cool this is, how cool this is. So this little thing here, this little profit, see that there? Look at that. That's today. Well, let's see. Let's put it on today. Make sure we're on 3, 4. Move this to 3, 4 so everything is just right. 3, 4. But do you see this thing? It just goes up to infinity. Maybe that's what we ought to do. Maybe we ought to do this on and show you. I like what it looks like on. We're at what expiration? 78 days, 2350, 2300. So let's go into Tastyworks. You do not want to miss today's session. This is a powerful, powerful trade. And we'll go into the macros. 78 days or so. I could go to 85 if I wanted to. And what did I say? What were those strikes? 2350, 2300. 2350, way down. So we would be selling the 2350 and we'd be buying the 2300s. Right? So let's adjust our quantities. So you'd be selling 3 of these and buying, do that one, 5 of those. Here we go. So has a little negative delta. It shows negative theta, maximum profit of 22,000, max loss 806. In this particular account, so any of you guys could do this, right? It's got a $66 buying power there. Probability of profit is less than 1%. My gosh, it's a horrible trade. Let's analyze it. Analyze the curve. There we go. And let's just see what this little puppy looks like. All right, let me scroll out. Scroll out. Am I scrolling out or am I scrolling in? Scroll out. What is wrong with that thing? Will it not show me the, let's say, analyze curve? Have I got both options? Let me go back to the table. We're selling 3, we're buying 5. That looks right. Curve and analysis. There we go. There we go. Here's what I wanted you to see. And apparently it won't let me go any farther that way, so that's fine. But I want you to see, in the event of a crash, look at the protection that you get. Man, now, what are the chances that it comes down to 2,200? I got it. I got it. I'm just showing you how the trade sets up, though, right? Showing you how this trade sets up. So in the event of a crash, this puppy works wonderful. Now, here's the problem, though. Because you're putting this trade on as a debit, you're putting this on as a debit, well, that ain't good, right? Because that way, if the market goes up, you're going to lose that little debit of whatever, $70 or whatever that it cost us to put it on. You're going to lose that. Well, we don't want to lose money if it goes up. So here's how I always did it. What I would do is I would leg in and just sell the 2350 3 times. And on what day you do it? You would do it on the day that the market is down, right? Now, Ron has a couple of different things that he showed about doing it. He would do it on 2 down days in a row, right? So on 2 consecutive down days, he would sell this. And then he would put in an order to buy the 5 of these when it could be done for an overall break even. Now, y'all, that was the most ingenious thing that I had ever thought or heard of in all my life with trading options. So again, if you're buying something, you want to sell something to pay for it. But in this case, instead of buying it first, we're selling first and then buying later. So this little trade, selling 3 of those, how much buying power would that take for my account? Take $502, right? By bringing a credit at $96.84. So then you want to say, well, I need to make sure that, you know, that the other trade is being put on for free. So what I did is I built a calculator. Now, I will say this, the calculator was never designed for the micros. I've not built it for the micros. But there is a tab that you and I have not played with this entire couple of months that we've been together, called the BSH. And I left in a lot of the verbiage that I had from last time, right? But I also built in a calculator somewhere. Let's see if I can find it. Watch it not be in my spreadsheet here. Maybe it's somewhere I've got somewhere else, but I think I gave it to you. Did I not? Closing trade, distributions, BSH break even. I ought to move that one back closer to the BSH. Here we go. All right, so BSH break even. Here she is. Whoa, that's the wrong one. BSH break even. And it was made to do on the ES or the SPX, right? I do them on ES and I do them on SPX, larger account. So the number of 3-5 tranches, you fill that in, and it automatically calculates everything. Only thing that you have to do is place in the stuff of the yellow. Well, what were the price of the shorts? Now, we're going to pretend that this is the ES, not the micros, because I didn't build it for micros pricing. But let's say that right now you can sell this one for $7. And we'll pretend it's the E-mini, not the micro. So if we could sell that, the price of this one for $7, it would give us the credit that we would receive in the micro and the E-minis, not the micros. And then I would put in the price of the longs that I would want to, you know, to buy those longs. What price do I need to put in there to do that? And then eventually you're going to harvest or close those short options. So the 3 that I sell, I'm going to close those down when they get to 20 cents, right? So I was normally going in and going, you know, $3, $1.50, $3, $1.50, so that overall trade would have a credit of $624 in this instance. But now we got to up this some, right? So what is the break-even price? And I think I solved this. Oh no, this should be good, y'all. Let's see if I can remember how I did this. Data. Solver, is that it? Hold on. I'm being vulnerable before you because I can't remember how I did this. It was so long. Let's see. Solve parameters. All right, set objective of K2 to a value of 0 so that you could put this trade on for, you know, break even of 0, right? So that it wouldn't cost you any money to put the trade on. By changing variable F2, which would give us the the debit that we would need to pay for those 5 loans. Can't believe I remembered how to do this. So K2, set your objective of K2 to a value of 0, and what price would you pay for the loans? And you hit the solve button. And it pulls up, or it should pull up. Work, baby, work. Don't embarrass me in front of all my friends. Come on. Can't be that complex of an equation. Waiting. Anyway, it should solve for this to come up with the debit that we pay that will make this thing absolutely great. Oh, there we go. So it tells me that if we buy that for $4, absolutely free. Well, I'd rather have it for a little debit, so I'd probably say I'd do that maybe for $3.50, right? Because if I change it to $3.50, hold on a second. If I change this down to $3.50, then I could have that trade on for a credit of $124. How does Daddy do it? So what I would then do is say, if I want this little protection, then I'm going to sell this today, and that has gone up some. Well, now it's gone down some, so it's walking all over the place, right? 725. So you sell this today, you sell 3 of them, and you are naked, right? You are naked 3 puts, but you are way out, friend. I mean, you are way down here. And then you're going to do a good till cancel order, or you don't have to. You can just kind of watch the prices, right? And darn fly, where'd you come from? Then you would do a GTC order. You could buy that. Let's see. Buy. Let me show you how to do a GTC order, and put in an order to buy that one at $3.50, and go over here and change it to GTC. That means good till canceled, right? And put in your $3.50 or whatever you want to buy that for, and send that order in, and that order would work until it's filled. And then you would have a beautiful trade that gives you tons of monzo of downside protection. Ain't it sweet? And you do it all for a credit, which means you have no upside risk. You could look at, let's see, you come to ES when it has 2 down days, right, in a row. So this is a 30-minute. Where's my daily chart? Can I change this to day? 1 year, 1 day. What does that look like? Come on, baby. Show me more stuff. Show me our stuff. Nothing. Unbelievable. Let's see. Where else can I see? Here, let's go to our thing here. I'll be glad when those things that Kim still send me in, where my internet will speed up good. So here's the E-minis, right? Why are you so small? Why are you so small? There we go. And now I refreshed it all of a sudden. So let's see if it refreshes. So looks like it was, you know, you go 2 down days. So this is a daily, right? So down, down. Well, we got 3 down days in a row. So today would be an excellent day to enter the shorts of that trade, right? And like I say, I've never done it in the micros, but it should work exactly the same. You just got to figure out what the break even is. Now you can, again, another variation is to go ahead and buy a couple of tranches of that, right? You could buy a couple of tranches of that 3.5 to go ahead and get your trade on if you wanted to, but you don't have to. But it's a very, very cool trade and a very, very awesome way of hedging a portfolio. Now, I had this trade on during February and March of last year. Here's our E-minis, right? So we see red, red, red. Excellent day to start that trade, right? We're still in our uptrend. We haven't really broken that. We're still going up. So the way I would enter it is I would start out and do it a little different. And here, if you want to do it another way, is I would sell at about, I don't know, anywhere from 80 to 120 days out. I would sell the 2350 here and buy one in the expiration before it. So I sell the 2350 in the 78 days, and then I would buy the 2300 here, which gave you a pretty similar risk profile. But my goal was to ultimately get the long in the same expiration as the short. So I entered this diagonally, right? I entered this as a diagonal. And I never had a chance for my GTC orders to fill. And y'all, it did not matter, because when that market went down in February and March, I was up well over 200%, having this entered as a diagonal. Now let's just see what that looks like. Let's go to 85, what we're going to sell the 2350 here. So let's sell 3 of those. And let's enter it diagonally and show you what it looks like. And then I would put a GTC order in to buy this when it gets down to that break even or a credit. But when I started them in February and March, I would go to the closer expiration. And what was that, the 2350? I would buy 5 of these. Hit your control button down and buy 5 of these. All right, so this is kind of a diagonal now way of entering. And let's see what this looks like. Analyze trade. So let's take off the first one that we did and see how this one compares. All right, so we've only got that one on. So check it out. It was really similar, right? Really similar, even though it was entered diagonally. Notice what happens when the market crashes. This expands. This profits as price goes down. It's very, very cool trade. Now, let's see how that compares. So up here, you're profiting what, $150, $160 on that one. Let's take that one off and let's just put the other one on that was not diagonal. See what it looks like. See if there's any difference between the two. Come on, think or swim. Play with me, baby. Hide positions, single symbol. Show me the money. Show me the stuff. Nothing. Stupid, stupid think or swim. Collect my garbage. Apparently, I got a lot of garbage. Go back to my Analyze tab. The Analyze tab is great when it works right. Come on, Analyze. All right, here we go. Yeah. So see, maybe this is a little higher there, but that trade worked beautifully. Oh gosh, did it work beautifully. And notice this one, if you do it diagonally, you can enter for, a lower debit than you could if you put them in the same expiration. But keep in mind, your goal is, this is just to start the campaign. This is only to start it. If you start it diagonal, I don't want you ever doing diagonals again. I want you to do it to start it. You're going to have just a little bit of money in this. Let's see, how much will it take? If I confirm and send, this would cost you $59. You do not do that trade, right? Just to put it on, then put the GTC to buy the 2300 in this expiration. Now, here's what I got to show you, though. Here's what I need to show you, and I hadn't showed you this yet. We've done expiration, we've done day steps, we've done all kind of stuff. But I need to show you what happens when volatility raises its ugly head with this trade. With this trade, we're going to go to vol step. What happens when the volatility spikes? And this is where this trade is amazing. We'll move that to 10%. Now, watch what this trade does in a volatile move to the downside. This is why I consider this the ultimate hedge. Man, is it powerful. Because when volatility increases, these are the different levels, varying levels of volatility. Let me draw you a little box over here because you're getting used to where we're looking now, right? To see what the profit or loss is. Well, if price is right at where it's at, the volatility is not going to increase that much, right? Volatility is going to increase as we go down. Now, let's see if Thinkorswim will move with us here. Hold on. Let me add some price slices to MES. 3, 4, 5, 6, 7. So say we do, this is price here, percentage, change that to percentage, that to percentage, that to percentage, that to percentage, that to percentage. And I want to see what happens. We won't worry to the, I shouldn't even added all of these, but let's say if this is negative 5%. Bear with me just a second. So we go negative 5%. Then I like doing this one is negative 12%. You're not going to play with me, are you? Stupid little thing. 5.0. Come on. Now, will you play with me? I want you to be negative 12. And I want you to be down 20%. So we can see what happens on our screen if we're down negative 20%. Why are you not playing with me right here? I want to see what it is at 12% down. Come on. Delete it. Negative 12. Come on, stay in there. There we go. So now we've got our price swatches down at the downside, right? So current price is at 37.59. 37.59. That's there, I guess. Yep, right around in there. So then here are our, what is this one? I'm trying to say, oh, we got a negative 10 down here. Let's take that out. Let's take you, well, I'll just fix it right where I've got them all like I like them. I like this one at 5%. I like this one at 10. Now, I don't want you at negative 10. You give me too many slices, you fool. All right, let's go 5. 5. There we go. 5. There you go, little friend. I like this one at 10% up. 10% up. And this one at 15% up. Let's see if we can get her to stay there. Do 15. Now we go. So I got 0, 5%, 10%, 15% up, negative 5, negative 12, negative 20. So our current price is 37.60. So let's check it out. That's here. This is a 5% drop, right? So look at the profit on the left, right? If volatility didn't go up at 47%, 57%, 67% is $861. Well, you probably wouldn't get that high level there. But what if you come down? You come down to 12%, which is right here. At 12% down, y'all, you're going to be up probably between that 575 and the 1179. What if price drops 20%, y'all? The heck? What the crap is happening? You're going to be up, you know, $900 to $1,600 depending on what the volatility is. What if it goes down 25%? Well, you can change with price losses, but these numbers, trust me, go up all the way to zero. It's over there, over there, over there. Isn't that amazing? And it cost you what? 50 something dollars to put on this trade? 60 bucks, 70, whatever it was. And you got that kind of down protection? Unbelievable. So that is the Black Swan Hedge. And there's a lot of different things to do and manage it as it goes on. Now, I'll say this, if you're going to buy your tranche outright, right, you could do it today. But I would say the better alternative is to buy an entire tranche on an up day, right? That's when you buy it. Now, if you're just going to leg into the trade and you're just going to sell your 3, you know, go out 80 to 120 days, sell the lowest one that you can find that has a 50 strike below it. Use that calculator to figure out what you got to put the order in to buy the other one, or you could do it diagonally. I showed you a couple different ways to do it, but I'm telling you that it's an amazing little bit of profit protection to the downside. And I didn't think that the diagonal entry was as strong as the other one. That proved me wrong in February and March when that puppy blew up and my count was up over 200%. My hands were shaking. I was like, I can't believe this thing worked that good. This is a fabulous trade. All right, any questions on that at all? Where's our little chat button? Y'all quiet today. Any questions at all? That's a beautiful trade, and it's one that any of y'all could put on in the micros. No questions? All right, then that'll do us for the day. I'll see y'all tomorrow, unless somebody needs some overtime help with a trade or something. Let me know. I'm here.